What is happening, everyone, and welcome back to Microsoft Sphere. The news cycle is absolutely electric right now, and if you blinked, you might have missed some of the biggest developments shaping our world. We've got a packed show for you today, bringing you the absolute latest and greatest from the heart of innovation. Get ready for updates that you absolutely cannot afford to miss. We're diving deep into the stories that are making waves, the decisions that are redefining industries, and the moments that have everyone talking. From the front lines of activism to the cutting edge of development, we're covering it all. So strap in, stay sharp, and let's get straight into the action. First up, a dramatic scene unfolded at the very heart of corporate power. We're talking about a direct confrontation that led to arrests right at the executive doorstep. What sparked this intense display, and what does it mean for the company's operations? We've got the details that matter. Then, we shift gears to the world of game development, where the buzz is all about artificial intelligence and its integration into the creative process. We're hearing reports of some very interesting directives being issued, pushing the boundaries of how creative teams work and collaborate. What does this mean for the future of gaming and the people who make it? You'll want to hear this. Next, we're turning our attention to the financial markets, where analysts are weighing in on the long-term prospects of a major tech player. With a close look at technicals and fundamentals, the consensus is building, and it's pointing towards a very specific outlook. What does the expert analysis reveal about the company's trajectory? And finally, we're exploring a strategic move in the investment world, with a key firm reiterating its confidence based on significant pricing adjustments. What's behind this bullish stance, and how might it impact the broader market? Get ready for a whirlwind tour of the news that's defining our moment. Don't go anywhere. Make sure you're subscribed and the notification bell is on so you don't miss a single update. Protesters detained at Microsoft headquarters. This incident highlights the growing tension between corporate practices and public activism. 7 individuals were taken into custody by authorities in Redmond following a protest that escalated to the point of breaching the security of Microsoft's executive building. The demonstration, which appeared to target the company's leadership, saw participants force their way into the facility, leading to a swift response from law enforcement. Details surrounding the specific grievances of the protesters have not been fully disclosed, but the action suggests a significant level of dissatisfaction with the company's operations or policies. The arrests occurred within the premises of Microsoft's corporate campus, a location that typically maintains a high level of security. The incident has brought renewed attention to the ways in which activist groups engage with major technology corporations, often choosing high-profile locations to amplify their message. The immediate aftermath saw a strong police presence, with the situation contained relatively quickly after the initial breach. The arrested individuals are expected to face charges related to trespassing and potentially other offenses stemming from their entry into the restricted area. This event raises questions about the security protocols at such large corporate campuses and the challenges faced by companies in managing public demonstrations that occur directly at their operational centers. The broader implications of this protest are yet to be fully understood, but it serves as a stark reminder of the scrutiny that major tech companies face from various segments of the public. This event has sparked discussions online about corporate responsibility and the methods of protest, with reactions varying widely across social media platforms. This intense situation is just the beginning of our deep dive into the week's most impactful stories. Up next, we're heading into the world of gaming development to uncover some fascinating directives regarding AI. King developers face mandatory AI integration. This development signals a significant shift in how major game studios are approaching creative workflows amidst technological advancements. Developers at King, the renowned studio behind the immensely popular Candy Crush franchise, are reportedly facing a mandate to utilize artificial intelligence tools on a daily basis. This directive comes from their parent company, Microsoft, and follows a period of significant layoffs within the studio. Sources indicate that while AI adoption has been encouraged for some time, the push is now towards 100% daily usage for all employees, including artists, designers, developers, and even management. The goal is to embed AI deeply into the creative and development processes. However, the effectiveness and reception of this mandate appear to be mixed. One insider shared that AI adoption is notably low, with the exception of widely accessible tools like ChatGPT, suggesting a general skepticism towards the mandatory AI tools among King's leadership. This sentiment is further fueled by the fact that the company recently underwent substantial layoffs, leading to a climate of uncertainty. Managers within King have reportedly acknowledged the need for workforce adjustments, with one manager suggesting that the company was bloated and that further layoffs could be on the horizon. This perspective implies that the push for AI integration might also be linked to a broader strategy of optimizing workforce efficiency and potentially reducing headcount through automation or by demanding higher output from the remaining staff. The situation at King highlights a critical juncture for the gaming industry, as companies grapple with the integration of AI, the impact of economic pressures, and the morale of their creative workforce. The tension between leveraging new technologies and managing human capital in a post-layoff environment creates a complex operational landscape for Microsoft's gaming subsidiaries. Industry observers are closely watching how this mandatory AI push affects King's development pipeline and employee satisfaction. Stay with us as we unpack the full impact of this AI directive. Next, we're shifting our focus to the financial markets for a crucial stock analysis. Microsoft stock analysis: neutral technicals, strong fundamentals, bullish outlook. This comprehensive analysis offers insights into Microsoft's market position and future potential. In the dynamic world of stock markets, Microsoft, MSFT, presents a compelling case for investors, characterized by a neutral technical outlook, robust underlying fundamentals, and a predominantly bullish consensus among analysts. While the stock's immediate price movements might suggest a period of consolidation, a deeper examination of its financial health reveals a company built on solid ground. Microsoft's fundamentals are consistently strong, underpinned by its diversified revenue streams spanning cloud computing, Azure, productivity software, Microsoft 365, gaming, Xbox, and hardware. The company's strategic investments in artificial intelligence, coupled with its dominant position in enterprise software, provide a significant competitive advantage and a clear pathway for future growth. Analysts, in their assessments, largely maintain a positive stance, citing the company's consistent execution, innovation pipeline, and ability to adapt to evolving market demands. The widespread adoption of its cloud services and the ongoing digital transformation across industries further bolster confidence in Microsoft's long-term prospects. While technical indicators may currently signal neutrality, suggesting that the stock is neither in a strong uptrend nor a downtrend, this often precedes a significant move. The underlying strength of the business, however, suggests that any upward momentum is likely to be sustained. The market's perception of Microsoft remains overwhelmingly positive, with many experts anticipating continued growth driven by its strategic focus on AI and its established market leadership. This combination of stable fundamentals and positive analyst sentiment provides a reassuring backdrop for investors considering Microsoft's position in their portfolios. The company's ability to consistently deliver strong financial results, even in challenging economic climates, reinforces its status as a stable, yet growth-oriented investment. The market's attention is now on how these factors will translate into tangible stock performance in the coming quarters. From market analysis, we move to investment strategy. Up next, a major financial firm shares its confidence in Microsoft's stock based on key pricing adjustments. UBS reiterates buy on Microsoft amidst pricing confidence. This financial insight focuses on strategic pricing, moves as a key driver for investor confidence in Microsoft. UBS, a leading global financial services company, has reaffirmed its buy rating on Microsoft, MSFT, citing strong conviction stemming from the tech giant's recent pricing strategies. This endorsement from a major financial institution underscores the market's positive reception to Microsoft's approach in leveraging artificial intelligence and its associated services. The core of UBS's confidence appears to be rooted in how Microsoft is monetizing its AI advancements and cloud infrastructure. In an era where artificial intelligence is rapidly transforming industries and driving unprecedented demand for computing power and data services, Microsoft's strategic pricing for its AI-enhanced products and cloud offerings is seen as a significant growth catalyst. The company's ability to effectively price its solutions, particularly within its Azure, Cloud Platform, and Microsoft 365 suite, is crucial for capitalizing on the AI boom. This includes not only the direct costs associated with AI services, but also the value-added components that enhance productivity and innovation for businesses. Analysts like those at UBS are closely monitoring these pricing adjustments, viewing them as indicators of Microsoft's capacity to translate technological leadership into tangible financial returns. The broader context involves massive investments in AI infrastructure and the intense competition within the cloud computing market. By making strategic pricing moves, Microsoft aims to balance market penetration, profitability, and long-term customer relationships. The confidence expressed by UBS suggests that these pricing decisions are perceived as favorable by the market, potentially leading to increased revenue and market share. This outlook is further supported by the overarching narrative of AI as a transformative force, creating immense opportunities for companies that can provide the necessary technological backbone and services. Microsoft, with its established ecosystem and ongoing innovation, is well-positioned to capitalize on this trend, and its pricing strategies are a critical element in realizing that potential. This analyst's view highlights the critical role of strategic pricing in maximizing the value of AI investments. We've covered a lot of ground today, from protests to financial forecasts, but that's not all we have for you. Stick around for a quick recap and all the ways you can stay connected with us. And that's a wrap on another electrifying episode of Microsoft Sphere. We saw protests erupt at Microsoft HQ, a mandatory AI push at King, a neutral to bullish stock analysis, and UBS doubling down on their buy rating thanks to smart pricing moves. What a week! If you found this information valuable, do us a huge favor. Hit that like button, subscribe to the channel if you haven't already, and ring that notification bell so you never miss an update. We're dropping new content constantly, so make sure you're in the loop. And hey, let us know in the comments which story caught your eye the most. Don't forget to follow us on all our social channels for even more insights and behind-the-scenes action. Thanks for watching, and we'll see you in the next one.